Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Johnny Wolff today. He's actually CEO and founder of HomeRoom Coliving. So I'm actually interested to know more about co-living. Is it similar to vacation housing? Is it something different? So I am looking forward to this episode. Welcome, Johnny.
Hey, Alpesh, really nice to be here.
Absolutely. So tell us something interesting or funny about yourself.
Well, kind of the fun one I like to use is my first word was cheese when I was a kid. So, but something interesting about myself in terms of business is this is my first startup. So.
Oh, wow. That's pretty. And you mentioned cheese. That's why you are living in the Midwest to make sure you have enough meat, beer, and cheese.
Just get as close as I can to all the cheese.
Because I remember that saying, because my very first trip to Midwest was in 2008. And I was I'm vegan now, actually. So I don't even eat cheese. But I was vegetarian back then. And I was looking for vegetarian food. And the guy tells me, why did you come to Midwest? We only eat meat, cheese, and beer. I still remember that sentence every time I go there. Of course, things have changed now, but it was funny.
A little bit, but I wouldn't say that it's moving to the Midwest is the best way to get in good shape. It's not.
No, I could tell.
Yeah.
And the weather does not help, right? So you are inside for 4 or 5 months a year. It even makes it even difficult.
Yeah, it makes it a little harder. But I mean, the food is very good. It's very savory. So
that's awesome. What was your very first real estate investment?
Yeah, so my first real estate investment was in Midland, Texas. My father was in financial planning and he was partnering with the real estate turnkey provider. I don't know if you're familiar with Midland, but it's like
Midland, Odessa. It's more like is it energy specific as well?
Yeah, it's Permian, the Permian Basin. It's just
because I was looking into it and I'm like, man, if the energy jobs disappear, then I'm in trouble.
Right, and the price to rent ratio is really good. And you're like, wow, this is amazing. And then if oil crashes, like it's a huge problem. So and I ended up buying a couple more houses there since 2008. And then over time, I was like, I just think there's too much systemic risk with oil. I think long-term as, how much is oil going to go down with electric vehicles and all that. So I transitioned all my properties into Austin or Kansas City.
Okay. So how did that first investment work out for you?
It worked out quite well. I bought a new build, which is, as a first investor, it's not a bad thing to do, so it's pretty painless at first. And the property manager did a nice job. So it worked out well. I mean, when I cashed out, I made because I bought right out of college the year after I graduated. Nice. And when I cashed out, I made like $25,000 or $30,000 in equity. And at the time, that was like the most money I'd ever seen at one time. So it was pretty exciting. So
when we get out of college, that's awesome, right? Looking at that kind of money in 2 years.
Yeah. So it's pretty exciting. I think that's sort of when it clicked for me that the appreciation really is where it's at with real estate. Even though I was in a cash flow market, the appreciation is what really made me move the needle for my life. So
nice. Is now a good time to invest in real estate? Because I see it like a bubble now, and of course I still invest, but what do you think?
Yeah, I don't think it's a bubble. I think bubble to me implies there's something systemically wrong with the supply and demand equilibrium, like we saw in 2008, where there was actually a bunch of people that own houses that shouldn't have owned houses, right? Because they had terrible credit, they never got their income reviewed, all this crazy stuff. Today, we're seeing what's basically been 10 years of inventory shortages where they've been building less houses than we need. It's gone from like 1.1 million housing starts per year to 700 housing starts per year. So we're now in like a 5 million house deficit that basically came from the Great Recession. So when the supply demand equilibrium is so out of whack, but the demand is just so strong, I don't think it'll be a bubble. I do think there's a very, very, very strong chance that we've seen 20% appreciation per quarter in some markets. That has to stop. But I don't see any reason why it would crash. The demand for, especially in the $150,000 to $350,000 price point, is crazy. And you can't just buy a million houses very quickly. It takes years and years and years. I guess my point is like, I think it's always good to buy. It's always a good time to buy. I think it can be more challenging to buy in some environments. So that's what I would say. Now, I do think houses that you buy today will be worth more in 5 years than they are today. And probably they'll continue to go up in value over the next 5 every year. I don't think we'll see a pullback.
But that would depend on the markets, right? So markets like I'm in San Francisco Bay Area, it's already bubbled up. Just from last year to this year, it's 15% up, and you're talking about a $1.5 million house, not 150,000 to 300,000. So it's getting not little bit, a lot out of that affordability zone, right? So at some point, but again, real estate is so regional that you can't compare Kansas City to San Francisco or New York to Austin, right?
Yeah, I mean, that's a good point. I think when I say it's a good time to invest, I don't think there'll be a pullback. HomeRoom is specifically focused on Kansas City, Austin, and Dallas today, and we generally are focused on the middle of the United States. I think there will be no pullback in that region. What happens in New York or San Francisco, not really my specialty, and I actually don't have any idea.
And you mentioned HomeRoom, right? And of course, you are the CEO of the company. What does HomeRoom do?
So HomeRoom it's a fusion of a couple things. We're on one side a turnkey real estate investment provider. We help investors find and buy properties, but not just a standard single family rental. It's all homes. We actually are helping them buy properties that will become co-living properties. And so and that basically means rent by the room, but with concierge amenities, typically higher end clientele. The reason that investors like that is there's more stability. You won't have the whole house empty. You'll usually have a few of the bedrooms will be fully, at least 60% occupied. So you'll never get a $0 a month, but also the total rent when it's fully occupied will be much higher. Some homes get up to 70% more rent when using co-living. So it can end up getting very close to short-term rental revenue, but without the level of effort and without the $0 like days and months and weeks. On the other side, we're a co-living company that operates 275 bedrooms across 23 cities, and we help find young adult tenants and help them meet. They actually make sure that they're compatible as roommates, and then we kind of engage them in a more exciting way than just like a roommate house. We have online events, we have photo contests, we do mimosa brunches, music shows, all this stuff. So it's more of it's a lifestyle living, and so that's what we do on that side. So help the investors get the co-living properties and then find the people to live there and then help them have a great time.
That's a very interesting concept. And of course, I'm going to have a lot of questions now for you. But the first question is, or I'm trying to understand. So you basically merged, and I started investing with a turnkey property in 2015 out of state. So I understand the model. The turnkey provider bought the property, rehabbed it and rented out for me, and they have a property management company. So you are doing it exactly same, just in a different model, that you are also finding the property, you sell it to the investors, and you also make it pretty much ready for co-living, like rent ready. But in this case, because you have to make sure every room is pretty similar, or they are, I would say, painted and whatnot, right? So it's pretty much ready. And then you manage that side as well, co-living, finding the right tenants, managing everything, expectations, as well as taking care of the repairs or anything the property would need. Is my understanding correct?
Pretty close. The only nuance there is we typically help people find properties on the MLS today. We're actually building out that part of our business in which we're actually going to find and rehab and flip into co-living properties. But today we actually will help you find a property to buy on the MLS. And so that helps us buy in a little bit better areas. Right. Usually flips end up having to be off-market deals that are in kind of more beat down markets.
Right. And right now the competition is so strong that you may have to just end up with MLS, especially in areas like Dallas and Austin, where you are focused on. And you mentioned 23 cities. Are those cities basically Dallas, Austin submarkets, and Kansas City?
Yeah, we're in 3 metros, but 23 cities throughout those.
Got it.
Yeah, the Dallas-Fort Worth metro is a lot of cities.
Yeah. Well, I know. And I have invested in Dallas. Of course, I got out last year, but I know Dallas really well. Kansas City, of course, I don't know much about, but Austin as well, I do know pretty well. So you mentioned MLS. How do you identify properties that will generate above average returns?
Yeah, for us, there's a few, key ways that we do that. One is we use data. We have a data scientist on staff
Oh, really? Okay.
who's helped us sort of identify areas. And so there's a mixture of things in terms of demographic changes to the area. We're looking for, growth to the population, but also specific growth in like our target demographic, which is 18 to 34-year-olds, college educated typically. And then we're looking for certain income requirements and that growing over time. We're also looking for some proximity to freeway. There's all these pieces that are at play for ideal co-living, but also and density is another piece. The other side of that is where the model itself with a certain house setup can actually just achieve way more revenue. So just by adding our model, a home that was renting for $1,700 per month and just had a terrible cash flow ratio will go up to the total rent will be $2,600, and then your cash flow will go from -2% to 7%. So HomeRoom's able to get you in a good area and get you like 10% more cash on cash returns than you would have in that same neighborhood with the house next door. So if the house works for us, we can basically create a great return property.
Got it. So a couple questions I have now. One is, what kind of data does your data scientist look at?
Yeah, I mean, we use ArcGIS, so a lot of it's focused on population, right? And population growth.
That's the first main driver, and second is the job.
Yeah, I mean, that's really it. It's just income times population. So that's why, we would say like, I don't think we'll ever take HomeRoom to Memphis or, Flint, Michigan, places where population is shrinking. Usually if cash flow is like 15% or 20%, there's like a really good reason. A friend of mine likes to say the best cash flow market today is Flint, Michigan. Like, do you want to invest there? It's like, no. So a lot of times when cash flow gets really high, you're in like areas that are going to have less demand when you sell or less appreciation potential over time. So there's a big reason why you get that. So we're generally trying to extract maximum cash flow out of really high quality assets, because over time we think that's where the maximum ROI is.
Yeah, and a great point you mentioned, right? And the third thing I want to mention as well, when you are getting great cash flow, that means that neighborhood has to be D or even below. And I have been through the entire thing in Cleveland, Ohio, where my very first investment, where I lost every penny because I'm like 20% ROI. I have never heard of it. Actually, it was over 20%. And in a year, I lost everything I had put in that property. And the property manager said that he cannot even walk in that neighborhood without a gun. So, that's what you get, right? So I agree. And especially when you are targeting co-living, you got to be in a really nice neighborhood, right? Because if someone can just afford $1,000 per month rent, why would they even do a co-living, right? So that's what Flint or Memphis will offer you, right? $1,000, $1,200 per month. Then why would you co-living even exist, right? So, but in your case, Dallas and Austin markets, those are pretty high-end markets, some of the areas, right? So you got to, even for co-living, I'm not sure what the rents are usually in those markets.
It's neighborhood by neighborhood and city by city, just like with a single family house, where it's like, it could be Dallas and it could rent for $7,000, but it could also be Dallas and rent for $2,000, right? So, and that, as a single family, for us, we have rooms that go for as high as $1,100 in like the heart of Dallas. In Austin, the average is over $800, but in Kansas City, we have rooms that are $375.
Right. Okay.
So we're kind of all over. We do find that demand actually exists for co-living, even in places where prices are low, including like the outskirts of Kansas City and like Olathe, Kansas, Shawnee, Kansas. Those rooms book up just as fast as our rooms in more expensive parts of the inner city. We find that there's always people want to live with other people between 18 and 34, typically more than I think average people, most people would expect. We've done research, and so is like Cushman and Wakefield, on the number of people living with parents and roommates right now. And it's actually 80% of 18 to 34-year-olds are living with their family or living with roommates. So only 20% are living alone. So that's sort of seen as like what everyone does, but it's actually very unusual. So we kind of think, your roommates are your family from 18 to 34 now. And so that's why the demand is so high. And there's, 26% of young adults are living with roommates. And that demand is actually pretty homogeneous across the United States, including like less expensive areas.
That is very interesting. So can you share numbers on one property, let's say in Dallas, and how it was acquired, what was the price paid, and what it's rented now, just to give us an idea?
Yeah, sure. So we had a property in Dallas, and one thing I want to say, Alpesh, is like the market is rapidly changing. So,
Yes,
so
it's
we actually had to
crazy.
change. We made a marketing campaign on Facebook, and it was like 2 months ago. It was just like, these are the numbers to get in. We just need $40,000. That would be enough in Kansas City or maybe even Dallas. And then yesterday we had to change everything because
Yes,
the amount of people, even in Kansas City, you have to come out of pocket some money.
everywhere.
Yeah, so it's crazy. So I can give you numbers on something from January, but I don't know if it'll be as applicable.
No, this is
But we
just to
bought,
get an idea how it
yeah,
works.
sure. So we bought a property with the investor bought the property for $240. It was a 3-bedroom, 3-bath at the time. They put in $15,000 into the property. Our investors do pay for furniture, and then they added 3 bedrooms with conforming bedrooms with egress windows and closets. And so then it was a 6-3. It had plenty of parking out front, and properties in that neighborhood were renting for $1,800. We got $3,100 in total in rent, and then we
Wow.
shared that with the investor. They got 85% of that. So their cash on cash was, I think, above 12%. Their ROI based, actually, no one's ROI, everyone's ROI is like 80% right now if you bought recently. So I don't know if it's applicable, but we forecast our ROI with the normal appreciation will be in the mid-20s.
Right. So, no, that is great, and I just wanted to understand how it works. So, is there any minimum bedroom and bathroom size you look for in a home, or if it's not there, you look into converting into it, right? So, is there any
Yeah,
minimum?
there's not really a minimum. I mean, we have an 1,800 square foot property in Kansas City that works as a nice co-living property. It's really about the floor plan and how that floor plan works. We generally looking to try to get it to 5 bedrooms. We do have 3 bedrooms and 4 bedrooms and 5 bedrooms, but 6 bedrooms and 7 bedrooms tend to pay off the best. So
Oh,
those are
okay.
usually what we're trying to get to. But we definitely have 5 bedroom homes that work great, and as well as 4.
I see. Okay.
We
Yeah,
do
because
we
I
do
was
have two.
wondering the more bedrooms will, of course, make more sense, right?
Sure.
And which is true. Yeah, you were saying something? So,
Oh yeah, we also shared bathrooms are also very important. When you have 6 roommates, you need 2 shared showers at least.
at
You want to
least,
keep
yeah.
that ratio healthy. So yeah.
So, in that case, let's say the example you gave, right? The properties in Dallas, 3 bedroom, 3 bath. So, did you then work with a contractor to get, the walls, etc., make sure they're conforming, and then add bathroom if needed, etc.? Is that how it works, or the investors have to tackle that side?
No, we do all of it. You actually, as an investor, don't have to really do anything
Okay.
except for pay for it. And we actually will we do a detailed pro forma of the property. We say, hey, this property we could do, it's at 3, we could go 4, 5, or 6. Which would you prefer? Here's the expenses. If you do any of those options, here's the rent you would get with any of those options. So that's kind of how we do it. And then they pay an invoice up front or upon closing, and then the second 50% after the work's done, and we take it from there. They don't really have to do anything. That's what we call it, a turnkey process. We identify the property, we'll tell you which one to buy, you'll offer on it, and then throughout the process, we take most of the action in terms of making sure the property works.
That's awesome. And then, what is your property management or the co-living management fee?
Yeah, so we have 2 different options. We have a guaranteed rent model, in
Okay.
which we will give you a fixed rent, and there's actually technically no fee on that one.
Ah,
That's
okay.
the guaranteed rent will actually be a bit lower because
Right,
we
of
have to,
course.
yeah, of course, it's guaranteed.
Yeah.
And so in the background, we make 30% on that, but
Okay.
you don't have any fees, right? The one I talked about where it's 30,000, the guaranteed amount would have been, $2,100
Got it.
per month, which is still 300 more than a
Then the
standard
regular
single.
rent. Yeah.
Right. And so you get guaranteed more. Awesome.
Yeah. Yeah.
Yeah. The other option is the revenue share where you get 85%. And I think that works out to like 2,650. So
Okay.
compared to the
So
1,800. So
15% is your
yeah,
fee. And
correct.
what does that 15% include? And then you have the contractors and handyman for getting
Hmm.
repairs done and all of that, right?
Hmm. Yeah, it includes everything. We don't charge leasing fees.
Oh, okay.
So it's just a flat 15%, and that's it.
Okay. Got it.
Yeah.
No, this is very interesting. I like it. So, but let's talk about how did you get this idea about homeroom? What was your journey? Because you started investing in Austin and Dallas markets yourself, but then suddenly you got the idea about homeroom. What happened?
Yeah, I started my career in the Silicon Valley,
Oh, you
and
did?
yeah, yeah.
Yeah, I'm
So
right here. Come on.
maybe we were neighbors. Maybe we were neighbors. Where do you live? Where do you live in the Bay?
Now I'm in San Ramon, Dublin, Pleasanton, East Bay.
Oh, very fancy. It's a good place to raise a family. Nice.
Yes, that's exactly what it is. Yeah. 10
Yeah, it's a
years I've
great,
been in the same place.
nice. Very cool. Yeah, so I lived in San Jose, Sunnyvale, San Francisco. But I
Uh-huh.
always lived with roommates because it's expensive.
It's
So
expensive, I tell you.
yeah, very expensive. So I think, I kind of, we did like really cool social events. We did a lot of, dinner parties. And I just thought that living with roommates was like the coolest thing. I actually tried to live alone when I moved to Austin in 2015 for a little bit. I was like, I miss the social dynamic of living with roommates. I decided to I bought the single family properties I bought in Austin. I actually turned into roommate houses. I ended up being able to cash flow a bit more, but then I could buy nicer properties and still be positive cash flow. And so then I guess over my life, I've probably found 50 roommates or so on Craigslist or Facebook. In Kansas City, I kind of just had enough. I moved to KC to add to my personal real estate portfolio with like more cash flow. And I was just like, I'm tired of finding roommates on Craigslist. It's just so terrible. I think it's better in San Francisco. There's so many high caliber roommates. But
Yes.
you see, it's a bit harder. So I just decided there has to be a better way for this to all work, in which the landlord's on the, working with you, not kind of against you, where you have roommates that you actually you don't have to find them on Craigslist. And so that's sort of what inspired me to start Homeroom.
That's very interesting. From starting from Midland to San Francisco to Austin to Kansas City. Wow, that's pretty interesting. So another question I have, and couple of things. One is, what kind of insurance requirements the investor will have? Does it change? Is it just a rental property or a short-term rental, or is it something in between? How does it differ?
We use a standard landlord policy. We do ask, our investors to just like mention it to their insurance agent, like, hey, this is what I'm doing. But co-living is not short term. Our shortest stay is 3 months, and that's usually like an exception for interns. But on average, people stay at homeroom for over a year. We have some tenants that have been with us for like 2.5 years.
Nice.
So it's a pretty long-term arrangement. And typically, if as a landlord, if you lease out your home to roommates, it's just a standard landlord policy.
Got it. And the next question is a curveball. We didn't talk about it at all. We spoke about all the pros, right? All the ROIs. Now let's talk about cons. Have you been through some horror stories? I'm pretty sure as a landlord I have been. So I want to hear about when the two roommates are fighting.
Yeah. So one of the things that makes co-living work is that naturally 99% of people that move in with roommates or strangers that at least they've had a chance to vet and we vetted have gotten along. There hasn't been issues that are extremely rare. We do have an option if you and your roommates aren't getting along, we'll escalate it to a counselor. And that's only happened twice out of 400 roommates in the history of our company. But yeah, we've definitely had some issues where roommates were they were not getting along, and we had to escalate to a counselor. And it was about the use, like one person wasn't doing it just ends up always being silly stuff, just the classic,
not keeping the kitchen clean. Yeah, exactly.
Yeah, exactly. That we have a lot of rules about that, and we do maid service once a month. Everything we're doing is to try to mitigate that stuff, but still over time, roommates generally get underneath your skin. Unless you're like very self-aware, like I'm just, I'm being, so that usually ends up being just a little friction like that. So,
right.
But horror stories, not really many. We actually haven't had to do a single eviction yet at our company.
Really nice.
Yeah.
That's awesome.
Yeah, agreed.
Yeah, agreed. Knock on the wood, right? So another question I have, what kind of rules do you put in place? And are those rules similar for, let's say, Dallas market to Austin to Kansas City? Or do you have to, differentiate between markets or even, sub-markets?
Yeah, our rules are the same across all markets. Our rules are actually, our concept is we create a framework of things that we think these are just not, we can't. This can never work. And then we actually ask the roommates to create their own house rules through like meeting once a quarter.
Okay.
So we try to be as, I wouldn't say hands off, but our framework is like, you can never have someone over for more than 3 nights at a time in a row, or you can never have 3 people over. Well, you can, but you have to ask your roommates, right? It's usually, if your roommates say it's okay and it's not going to harm the house or the neighborhood, then it's okay to do at homeroom, right? You can't have guns, you can't do things in the common areas that are not going to be beneficial to everybody. You have to do your dishes. Basic frameworks are the important part, but how every house runs itself is, they're allowed to self-determine what they think is the most important.
And how is the, let's say, cable, internet, phone, etc. Are they being shared, and is it paid by homeroom? So that, and then I don't know, charge back to the tenants, or how have you evolved on utilities, etc.
Yeah, I mean, that ends up being one of the harder things is like as a roommate, that would always just kind of drive me crazy. It's like the water bill comes like a month and a half later, and then someone moves out, and then you're like trying to text them to give you like $75 for like the water bill from like 3 months ago. And so homeroom sort of has stepped in the middle. We just don't do that. Homeroom pays all the utilities in our name, and then the roommates pay $140 a month for fixed everything, and that includes
the fixed costs.
Gigabyte internet, all the utilities. We also include the maid service and the yard care in that, because those things need to be done and roommates don't typically do that.
No.
So basically, really the way that we're thinking about it is like, if the roommates were like the worst case roommates, they're just super messy, super problems, and they did not take care of the house, what kind of framework will we need to make sure that the house is still well taken care of? And so that's what they pay the $140 for. And that's the monthly cleanings. That's kind of all the junk removal, anything that we need to do to make sure the house is always in great shape.
Another question I got now
Sure.
is that, like, when I have my own rental property, my contract is with my property management company saying that, they are managing my property. And then when the lease is executed, still my name is there and they are the property management company. In your case, you mentioned that homeroom will have the, utilities on their name. So how does the contract between you and the landlord work, and how does it work between you and the tenants?
Yeah. So, and this is something we're actually looking at with our lawyers right now. So there's always a chance for change, but the current way that we do it is homeroom is a master tenant, but we don't pay a fixed amount to the owner. Typically we pay 85% of the rent we collect. So it gets pretty similar to commercial properties, in which, a commercial building, they will a lot of times would actually pay based on receipt or revenue or anything like that. So that's sort of how homeroom operates. It takes away the risk for us in terms of like having that guaranteed payment, kind of the WeWork situation. And so that's really kind of why we do that. We still do offer guaranteed. It's just it's relatively expensive if you go that route. And we've done a lot of analysis on that to make sure it's a good idea for us as well.
And are you, my last question before we take a break, are you looking into other markets other than these 3 markets you are in?
Do you have any recommendations, Alpesh?
I mean, you already know this market. It's just too expensive, but co-living will work because it's expensive, right? But even Atlanta is another market. I think your model will work. Downtown, Midtown area. It's awesome. Raleigh is same as Austin at this point. Seattle, Raleigh. I think some of those, and with your background in Silicon Valley, it could be good.
Yeah, we've definitely looked at both of those. I think Indianapolis is interesting.
Yes.
Phoenix, Chicago.
Phoenix is another market. Yeah.
Yeah, there's definitely a lot of markets that we like. I think we're trying to figure out right now what's the next one. We typically actually partner with real estate investors who are like, I'd really like to go to this market. Once someone says, hey, I'll buy 2 or 3 houses with you to get us started, then we'll do it. Because all of our things, a lot of what we do is centralized, we're able to kind of expand to new markets pretty quickly and pretty affordably. So
awesome. This is great. Let's take a quick break. And after the break, we'll go through the same questions I ask every guest.
All right. Sounds great.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's Wealth, WEALTH, Matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Johnny threw a lot of golden nuggets, as well as pretty much helped me understand how co-living works. So thank you, Johnny, for that. Are you ready for fire round?
I'm ready, man. Let's go.
Let's go. Would you be changing any business or investment strategy after coronavirus is over?
No, I think in a lot of ways, the coronavirus made us a better company. I think a lot of what we're seeing out of the best property management companies in the United States, or not the best, but the ones that are going national, Mind, OneRent, is that you can do a lot of more things remotely and overseas. And so the COVID actually pushed us in that direction, and it's helped us a lot, bottom line, but also just generally experience for our tenants.
So this is you are the third guest who mentioned about this in last month or so. The other guest mentioned that, we had a lot of dead weights in the office. Then they were able to get rid of most of it and move everything overseas now, and they are able to manage everything without being anyone in office. And he said, they are paying, I would say 1/5 of the cost of they were paying before. So it's been great. That's awesome. Favorite real estate or finance or business book?
I think The Richest Man in Babylon is my favorite in terms of finance books. I just think it's like powerful stories, and it's something you can share with, like, I had my girlfriend read it and she's a teacher. She doesn't love, but so I think that's a really cool one.
Well, that's great. Any tool or website you recommend or you use for all your data analysis or even looking at properties and whatnot?
Yeah, so we really like BestMap. It's actually an advisor to our Lee Ripma. She actually created this site. It's relatively new. They just launched, but it uses ArcGIS data, and it helps you kind of analyze properties on a per property basis, gives you analysis on all the stuff that we're talking about, which is the market growing in terms of income and population? How's the crime? How's the, all that stuff. So that's one of the tools we always use.
Awesome. How do you give back?
How do we give back? I mean, affordable housing, we offer affordable housing to young adults. I think that's, where we are in terms of giving back today. But over time, part of our strategy for engaging the community, and we honestly had to put a lot of this on ice over the last year, is engaging. We have a lot of, 23 to 28-year-olds who have a lot of time and energy, and we're going to start doing and this year we're going to start giving back more as a community.
Great. How can my listeners reach out to you?
You can reach out to me personally at johnny@livehomeroom.com, or you can check out livehomeroom.com-invest. It has like a cool video with that we had made that we're proud of, as well as information about our numbers and how everything works. And then our team would hop on a call with you and kind of explain in a bit more detail why we think it's the best real estate investment in the biz right now.
Thank you so much, Johnny. I enjoyed a lot, actually.
Thanks, Alpesh. It was really cool to be here, man. Great questions.
I appreciate it.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!